It's noon here in Ventnor City, New Jersey, and our nation's capital, Washington, D.C. And this is CarEdge Live for Friday, July 21st, with your host, me, Ray, here in Ventnor. And, excuse me, but Zach representing the Dodgers and Shohei Ohtani in Washington, D.C. What the hell is wrong with you, Zach?
Did Pops just say Friday, July 21st, or did I mishear it? So I don't know.
July 25th.
July 25th.
July 25th. I'm sorry.
I think he said July 25th. All good. Happy Friday, everyone. Thank you for making it another week, another Friday here with me and Pop's CarEdge Live. We're going to be talking about what's going on over at Mercedes-Benz. So we got some interesting new stories there, as well as some dealers. Going to be talking about Autonation Group 1 in a little bit, too. Before all that fun stuff, and our sponsor today, before all that fun stuff, Dad, I want to pull up on the screen CarEdge.com. Buy a car without the headache. So much good stuff going on back at CarEdge.com. It continues to be my birthday bash. For those of you that are unaware, July 22nd was my 30th birthday. I felt very loved that day. And to thank our community, we're providing 30% off CarEdge Insights, the tools we use to navigate the car buying process, and our car buying services. So 30% off. It's our biggest promotion we've ever done. Please take advantage of that back at CarEdge.com. And for those of you that are curious, we continue to iterate and play around with the AI agent. We've got almost 400 people now, Dad, using the AI agent to help them buy a car. Just go to CarEdge.com, go to the car search, and click on Negotiate This For Me. And you can have CarEdge AI protect you and your information from the dealer and negotiate on your behalf. Dad.
Yes.
The big story this morning.
Yes.
Mercedes is dramatically decreasing the pricing of their electric vehicle lineup in 2026. And I'm not talking a few $1,000s. I'm talking close to $10,000 and more from the actual MSRP on these vehicles. Let's talk a little bit about this, Dad. Mercedes-Benz seemingly can't sell anything, and they're finally being forced to slash prices. What's going on here?
Well, that pretty much sums it up. They can't sell anything, and they're slashing prices. Oh, and by the way, they're no longer taking orders for U.S. vehicles. So it sounds like they've got everything under control. Let's face it. You and I did a video a couple of years ago where we were walking a lot of the Mercedes-Benz dealership in the Atlantic City area.
Yep.
And I never saw so many EVs in my entire life. It was just row after row, acre after acre, and the price points of these things was just, it was mind-boggling.
Yeah. Even
if you qualified at that time for the $7,500 federal tax credit, it was still an astronomical sum of money. And, well, there were two things that happened. A, they didn't sell well. And B, people weren't enthralled with the look of the vehicles, the egg-shaped dolphin look, whatever the hell. I mean, it was unusual to say the best. So it was an off-putting look with an even more off-putting price tag. And now that subsidies are going away altogether, I guess we're really finding out how much margin Mercedes-Benz might have had in these products, because when you look at the size of the reduction in MSRP for the 26 model year, it's astronomical. Oh, and the other thing you can actually look at is you can still find some brand new 2023s that are available that haven't sold yet. So, yeah, I'd say Mercedes at this particular point in time is in a deep doo-doo when it comes to their EV lineup.
Let's spend a moment on that, Dad. So we've got nationwide, I'm here on the CarEdge machine, we've got nationwide Mercedes-Benz electric vehicles new for sale, almost 4,000 of them sitting around. And let's go ahead and look at that. Let's go days on market oldest. So let's see the oldest ones. Oh, goodness gracious.
Woo. Woo.
I think we should reach out to Benton Imports. What do you think?
Well, I mean,
let's do it right now. Let's reach out to 3 of these dealers with their oldest vehicles, oldest Mercedes-Benz available for sale. Let's use the AI agent, and we will come back to this. Whoops, I thought I was logged in. Am I not logged in?
It says you're logged in. It just showed ZS at the top right of the page. But
Yeah,
what
I
do
have
I
my
know?
active negotiations. All right. Well, I'll have to. I guess I don't have access. I'll have to make a
Well,
request to the team.
when the
Damn.
CEO doesn't have access, then we've reached our limit. So
Let's see here. Yeah, it didn't get added. Okay, I don't know what's going on there. That's a bummer. Well, I think we should reach out to these dealers. I guess we'll have to do this on Monday. I'll try and see if while we're on the show here, I can get that fixed for me so I can reach out to them because I'm curious, what the hell are they doing, Dad? This one 1,000 days on the market, 949 days on the market, 945 days on the. I mean, there's not only 2023s, there are a few handful of 2022s, and look at the price points on these things.
they're not cheap.
They're not cheap at all.
Yeah, and so they wonder why they couldn't sell them, and they wonder why they have to reduce the price, and shame on you if you're a dealer that's sitting on a car that's been there for 941 days. I mean, what were you thinking? It was like a fine bottle of wine. It was going to get better. It doesn't get better with age. Okay, they fall apart. There's lot rot that happens. You're probably going to have to invest in 4 tires on those vehicles when you go to sell them. It's just inconceivable to me that the dealers can get so stuck in their thinking that they don't realize how much it's actually costing them to hold firm on pricing on. Well, after 1,000 days, I don't know. I would think you might get the idea that the public's telling you we don't want it at any price.
So to your point, Dad, what is going to happen to the pricing? Obviously, Mercedes-Benz has stopped taking orders. You mentioned that a moment ago.
Yeah,
You're seeing between $4,000 to $15,000 price reductions on these vehicles. What does that tell you about the state of new electric vehicles and the state of these manufacturers to a degree? More broadly, it says that they put a lot of money into a basket that those chickens are coming to roost. Wow, that is a sentence. Eggs, basket, chicken, roost. What do you make of that, Pops?
I like your hyperbole better. I'm not sure, but I'm pretty sure those chickens were trying to read between the tea leaves.
There it is. There it is. But yeah, I mean, they have some serious problems there, and this is not the only automaker. It's just another story and another demonstration of an automaker struggling with the same problem.
Well, the thing that's scary is that some of these EVs are actually built in their Alabama plant, but they're not taking any more orders for 2026 for U.S. consumption. So I guess what it's telling you is that they'd rather take the vehicles that they can produce in the United States and ship them to other parts of the globe than to try and have to deal with them here in the States. And so I think ultimately, and I know there will be EV aficionados in the comments when I say this, but I think ultimately what it says is that we tried to force feed the American public on the concept of EVs, and the American public has spoken loudly and clearly that there's about 7% of us that are interested, and the rest of us, the other 93%, are saying we're not buying it at any price. And so they finally relented, and to a certain degree they're reversing course, which is at a certain point, if what you're trying to force feed the public and the public won't take it, then you made a mistake. Admit your mistake, move on in life, and pretty much they have, because most of these vehicles originally came out in 22 and 23, and we're what, 3-4 model years in, and they're going, okay, that's enough.
Dad, we're going to take a second to thank our sponsor, and then we're going to take a couple minutes to thank Mark in our community. Mark, I see that. I just want to get this out of the way really quickly first. Wow. Pops, there's a major issue going on out there, and it has to do with data brokers selling your information online. That's why we're proud to have our sponsor, Delete Me.
Yes.
Data brokers are selling things like your phone number, social security number, and home address online every single day. And they're available to marketers, scammers, and all those people in between. Delete Me, and you can see here I have my July 2025 report on the screen that Delete Me just sent me. Delete Me helps you take control over your data. Delete Me removes your personal data from hundreds of data brokers on your behalf. You can see here just last month, over 2,432 listings were reviewed by Delete Me, saving me 97.5 hours of work searching and 46.5 hours removing my information. And for the CarEdge community, Dad, Delete Me has a special offer. You can get 20% off with the code CarEdge. Just go to joindeleteme.com/CarEdge and take advantage of that promotional offer. Again, we're proud and grateful for Delete Me's continued sponsorship of our program. My dad and I both use the program, and we really like it. Pops.
Yes.
From Mark here. This is incredibly generous.
Oh, Mark, my goodness. Thank you so very, very much.
Wow. Thank you, Mark. Greetings, CarEdge team. I am sending this to you as I purchased a 2022 Hyundai for my wife. If it hadn't been for all the support I received from you then, I never would have saved the money I did. The salesman told my wife privately, he's good. God bless. Well, Mark. Dad, this is an incredibly beautiful gesture. And Mark, congratulations on a job well done. Pops, what comes to mind when you see something like this from one of our longtime community members?
It validates why we do what we do. It encourages us to continue to put in the time, effort, and energy to help level the playing field so that the next time you need to navigate the journey of buying a vehicle, you'll be better positioned to do so where there's less likelihood that you're going to be taken advantage of. So it warms my heart when we see things like that, when we tangibly know that we're actively helping people save money. What's it say to you?
It just sits with me for a second, like there's not many people I think in my life, Dad, where I would show up and I'd say, hey, I want to contribute $100 towards their costs. I'm like sitting here, I'm like, nonprofit, sure. There's like an altruistic cost, but you and me are just some guys that show up on YouTube every day, and we've built a business and we try and help people. And, something like this is really meaningful to me. So I'm just sitting with it for a second. Really appreciate Mark. And Mark's been a longtime member of our community. We see him all the time and we really appreciate it. So congratulations to you and your wife. Congrats on getting a he's good comment from the salesperson, Mark. And like I said, tremendous thank you for what you've done here and what you've shared. Dad, let's switch gears. Let's talk a little bit more about the auto industry. And let's turn our attention to Autonation, one of the largest car dealers in the country, reporting a profit drop of 34%. This comes on the heels of another publicly traded dealer group, Group 1, talking about how they anticipate bigger impacts from tariffs in the second half of 2025. What'd you see reading through the tea leaves here of these auto dealer financials?
Well, sales were up. Gross revenue was up and profits are down. Average profit per vehicle, whether it be new or used at Autonation, which is the second largest publicly traded dealer group out there, average profit per vehicle sold was down on both new and used. And so it indicates to me that even though sales are up, there's an affordability issue. And the only way at this point they're trying to figure out how to deal with that is to cut into their profit per vehicle, which is, for longtime listeners, you will have heard this before. But prior to the pandemic, at most mass market automobile franchise dealerships, new car departments very rarely, well, I shouldn't say very rarely, many new car departments did not make money. They were not profitable. They were a means to an end. They were a loss leader to bring people in so that you could make money in other areas. So what do I mean by that? The average gross profit at a mass market new car franchise dealership in 2019, 2020, before the pandemic, was somewhere between $200 and $300 profit per new car sold. In Autonation's latest report, I think theirs is $2,600 per new vehicle sold, which is down quite a bit from the first quarter. So we are still profit-wise way above where new car departments typically were. But we're moving back down in the right direction. Now, I know people are going to say to me, well, if you're only making $200 to $300 per new car, how are you making money? I don't know. There's a thing called finance and insurance. There's a thing called parts and service, and there's, well, the used car department. So that's where you were making money. So to look at these numbers and see that sales have increased but profits have declined, and that's only happened because interest rates are too high and the affordability concerns for too many of their customers.
Yeah.
Hopefully this continues to trend in the right direction where pricing might get lower for purchasers out there.
Yeah, hopefully, Dad. Hopefully, it is a sign. And then you obviously have Group 1 coming out talking about similar challenges with profitability. And this also comes on the heels, Pops. I'll pull it up in just a moment here. Kia coming out and saying that they're going to have to reshape their U.S. strategy. So it's not only at the dealer level, it's also at the automaker level. And you can see here, Kia reshapes U.S. sales strategy, cuts incentives over tariffs. So where's that going to hit the bottom line? Probably at the dealership level, because to sell the cars, they're going to have to discount the prices even more, but they're not going to get as much support from the automaker in terms of incentives.
We have continually said it, that manufacturers can either eat the cost of the tariff or they can raise the price of the vehicles and increase the amount of the incentive that they offer the potential buyer.
Yep.
But they can't effectively do both.
Yeah.
Okay. Because doing both wipes out all the profit altogether. And last time I checked, every one of these organizations is profit oriented and supposed to be a profit making company. So yeah, you have to make choices here. And Kia and Hyundai initially we're just going to absorb the cost of the tariffs, and we're going to pretend like it doesn't exist. Okay, and we're going to keep our incentives high. Okay, well, now they have to revisit things, and well, we can't keep absorbing the cost of the incentives and keep the cost of absorbing tariffs and keep our incentives high. We have to do one or the other, and so they're cutting back accordingly. So when you look at how's that going to impact dealers, it will definitely cut into dealer profit, because
absolutely
dealers are going to have to become more motivated to sell the product that they have at a lower price point. So rather than working at a 5 or a 6 or a 7% net income on everything they take in, which is 3 to 4 times higher than what it traditionally had been at dealerships, that number might revert back down to 1.5 to 2, maybe 3% going to net income, which is where it had been prior to the pandemic. So it's going to create a struggle for dealerships, because it is definitely going to cut into their profit margins.
Yeah, it seems like profits are going to be cut at the OEM level. Kia had reported 24% decline in profits, even though revenues were up. Similar story there at Autonation, which ultimately all this points to, I think, good news for consumers. The fewer cars that are being sold, the longer they sit on the dealer's lot, the more incentive both the dealer and the automaker has to get rid of the metal. It seems like for a period of time here, we're going to be kind of in transition from what was a seller's market back to a buyer's market. And during that period of time, there will be pain that'll be had on the bottom lines of these publicly traded companies, automakers and dealers, which then in the following quarter should manifest itself in buyer's market activity, aka they will come back with incentives, or dealers will say, okay, screw it, we'll discount the price to get rid of it. It's cyclical to a degree and unfortunately highly volatile. So I think we're going back into what'll be a buyer's market instead of a seller's market, which, to be clear, beginning of this year was looking more like a seller's market as inventories were starting to dwindle down, as demand was through the roof pre-tariff. Now in a post-tariff world, it looks like we're swinging back in another direction.
Every manufacturer, every pundit expects a huge sales slowdown for both new and used cars in the second half of the year. The only area where I think there could be a sales increase is in EVs,
Yeah.
because we know that the federal tax credits will be done come September 30th. They are completely wiped out after that. So anybody that's looking to buy an EV and any dealer that's looking to sell them, they there should be an increase in activity in that one segment of the auto market. So I think for the third quarter, sales won't be quite as bad. Overall sales won't be quite as bad as what people had projected, simply because of the artificial increase in EV sales. Once the fourth quarter hits, it's like all hell's going to break loose, because at that point there's no incentive for anybody to buy an EV. Prices, as more and more of the 26 model year cars come in, will be higher. Affordability will be even much more difficult than it has been. It's going to be it should be a buyer's market in the fourth quarter, if there's any buyers out there that are really looking to spend the money.
And Dad, we've had some questions come through in the chat. What about the used car market? I would say that as new car prices continue to stay quite high, you have more people going to the used car markets. I think the used car market is a little less volatile, stays a little steadier. There's more demand, continues to be more demand there. But I would say the used car market also becomes a buyer's market over time. New car market even more so, because that's where there's the acute pain point of inventories building up. That's where you've got the OEM to dealer relationship causing friction and pain. So I think new car market, more of a buyer's market. And then on that pendulum, I'd say like back in the direction of being more neutral is the used car market. Fourth quarter, though, I think everything could change. We'll look at more of the data. We'll probably make a video about this over on the main CarEdge channel soon. But it is fascinating to see Mercedes-Benz today, Kia today, the dealers, like the headlines write themselves for us, and they paint a very clear picture of what's going on out there in the auto industry. Dad, I want to switch gears because there's another automaker that we've talked about a bunch, and a huge shout out to David on our team who pulled together this incredible infographic. So much info on this. You ready?
Wow, yeah.
Nissan in free fall. There's 3 different sections on this infographic that I posted over on X. First, a decade of volatility. Nissan's profit swings revealed deep financial turbulence, ending in another $4.5 billion loss in 2024. So here's Nissan's performance over the past decade. And you can see some really bad years and some decent years as well. 2017 making $5 billion doesn't sound too bad, but look at that last year, Dad, a $4.5 billion loss. If I scroll over here to the right, what we're looking at is Nissan's sales struggle both globally and in the United States. So you can see Nissan sales globally, that circle at the top, and here in the United States, it's going down fairly significantly. The size of the circle representing the amount of market share that Nissan has. And you can see just in both cases, globally especially, Nissan is struggling. But market share in the United States in 2022, for example, was like non-existent. They've been highly challenged here in the US from a market share perspective.
It's almost as if Nissan's got small balls.
There it is, Pops. And then we've got the days supply of inventory. And now, this is plotted from 2023 all the way to present in 2025. And you can see slowly but surely going up and to the right in terms of the amount of inventory that is sitting there. So a huge congrats to David on our team who pulled this together. I think it's a brilliant infographic. So much great data on it. That's really, when you look at it piece by piece, digestible. Paints a pretty dire picture for what's going on at another automaker.
It really does. And when you look back to when they lost $4.5 billion, and then the following year they lost $3 billion, so that was $7.5 billion. And the 3 years after that, even though they swung to a profit, well, the profits they made in those 3 years did not equal the amount of the losses that they had in those 2 really bad years. And then when you add on top of it that then they swung to a $4.5 billion negative, you can understand why they might not have the cash to survive this. And we know they're doing their best to try and raise cash because they're selling off things. There was talk of selling their major headquarters in Tokyo for $575 million or something. They are looking for ways to generate cash, and so they are selling off assets in order to do that, because they don't have enough to sustain themselves I think people in the business call it runway. They have what, maybe a 12 to 15 month runway based on the cash that they have on hand.
They got to sell some cars. That's for damn sure. And Pops, if I ever come to you and say, hey, we got to liquidate the condo, just don't ask any questions. Okay.
Well, then we'll put the damn thing up for sale, and we'll live in the CX-30.
We've got here from Rich. Thank you, Rich. Guys, check out the website, China Truths, and the video China's EV Nightmare. The CCP doesn't want this out. I don't know, Rich. I'll take a peek at that after the show. I know Volkswagen's head, who represents them in China, recently said that they're not going to be playing in the price wars there, that they can't compete on price in China. So it's definitely some interesting dynamics internationally for the auto industry, and definitely something here, Rich, that we'll take a peek at as well. And Orange Rubber Ducky, great job on the graphic, very visual and easy to follow. Yeah, again, David on our team did a great job. I posted this over on X. If you're not following me, Shefska, or CarEdge, my CarEdge over on X, you absolutely should. We've got more infographics like this coming out more and more frequently. Really appreciate David doing that. I'm pulling it up one more time. Again, Mark, earlier in the show, for those of you just joining, with the incredibly generous donation and contribution to our cause here at CarEdge. Appreciate that, Mark, and congrats again on a job well done. Okay, so auto industry in free fall. Dealers not making money. We have 30% off back at CarEdge.com. I don't know. That's Friday for you, folks.
Yeah, you keep it up, we won't be making any money.
I hope not. I like my job. I want to keep doing this.
Well, I like your job, and I like my job. I was having a conversation with your sister yesterday about it. She said, well, you must have loved not working for that week. And I said, no, truth be told, I was bored out of my mind because I didn't have a real reason to get up in the morning. Because I knew at 11:55 I didn't have to go on to StreamYard. So it took everything out of me not being able to share with folks. So what we see going on, if I may, doesn't necessarily bode well for us, because if sales slow down, our business will slow down. So I know people say we're nothing but doom and gloom. No, we're trying to report what the future looks like. Now, can we be off on what we think the future holds? Absolutely. Everybody is, because nobody can really read the future. But it doesn't bode well for the automotive industry. And well, maybe in a sense it does bode well for us, because more and more people might want to utilize our services in an attempt to save even more money, since, well, there's an affordability issue.
Maybe, Pops. From Core Guy here. Thank you, Core Guy. Pops, would love to hear your input and reaction to car vids like General Motors impending doom by connecting the dots channel. Sounds like we've got some research to do after today's show, Dad. Some videos to watch over.
Well, and here I was thinking maybe I'd go to the Borgata and gamble a little bit, and now I'll spend my afternoon watching videos.
Exactly. Yeah. Well, folks, we're going to call it a show. We'll be back on Monday, except actually I'm off on Monday, Pops. Speaking of days off, I'm off on Monday. So I'll contact Justice, get you in. I'm going off the grid for a day on Monday, but I'll be back on Tuesday. So I'll contact Justice. We'll make sure you got a co-host. And I'll be back on Tuesday, but you'll be back on Monday.
I just told that tale where that week you took off nearly killed me, and you're back for a week or a week and whatever the hell it is, and it's okay. I'm taking Monday off. When I was younger, I would have said to you, "Damn, I got to get a job like yours," where I just work occasionally when I want to work.
I work more than occasionally, Pops. I'm taking Monday to celebrate my birthday. I've got a hike planned. So anyway, that's when I'm celebrating my birthday.
You didn't have to explain it to me and the audience out there, although everybody's going to want to know, where the hell is he? What is he doing?
Old Rag Mountain, baby. Going for a hike. Gonna enjoy that. So it's actually going to be blisteringly hot and probably not that pleasant, but gonna enjoy it anyway. We'll be back on Monday. I'll be back on Tuesday. Much love, everyone. Enjoy the weekend.
Have a great weekend, everybody.